Welcome to our smart home buying system. I'm LeVar with the Hardin Real Estate Group, and I want to help you save thousands in your quest for home ownership here in the Houston area. So, first things first, again, my name is LeVar. I am the owner operator of the Hardin Real Estate Group. I'm not only a real estate agent, but also an investor. Originally from Chicago, I've been licensed since 2006 in Illinois and obtained my license here in the Texas area in 2016. 17 years of experience. I've helped thousands of families. I'm a new construction specialist, negotiation specialist, and you can see the rest. All right. Today, what I'd like to go over is obviously home ownership fears and facts, our smart home buying system, and then the 8 steps to home ownership. Okay. We believe that if you're not left with an amazing experience, we haven't done our job. We don't measure success through personal achievements or awards, but through satisfaction of our clients. Therefore, you, the client, come first. Okay, so we'll begin with homeownership fears and facts. The most frequent fear that I hear when it comes to home ownership is I simply can't afford to buy a home right now. And at the end of the day, that is a myth. Ultimately, you can't afford not to buy a home right now. The way that rental rates are climbing on an annual basis, firing your landlord makes the most sense. If you have bad credit, get with a lender that can review your credit profile and make suggestions to help you, qualify for a loan for mortgage, or help you get mortgage ready. Ultimately, a lender will take a look at a couple things, one of which is obviously going to be your credit score, your income, your debt, and the available cash and assets that you have for closing costs and down payment. And going into down payment, let's take a look at the second fear. I don't have 20% for a down payment. Well, long gone are the days where 20% is the requirement for a down payment for a mortgage. If you don't have down payment, there are lenders that offer zero down, 100% financing options. Yes, zero down, 100% financing. If you don't have closing costs, there is no better time than right now because sellers and builders are offering everything they can to get people into homes, right? As far as closing cost contributions, interest rate buy downs, whatever it takes, a lot of sellers and a lot of builders are offering incentives that we have never seen before and probably won't see again for the foreseeable future. So right now is an opportune time to take advantage of this, right? And then third is I can't afford to buy my dream home. Ultimately, what gets you closer to that dream home is actually buying your first home. And what I mean by that is typically a person will buy a home and they're able to trade up to a larger home or to their dream home by tapping into the equity that they have garnered or procured over time as that asset or as their home has appreciated, right? So those are I would say the three fears or the three myths that I hear most frequently. All right, so let's dig into our smart home buying system. So we've adopted a proven, repeatable system backed by market research to find a perfect home, ideal for you and or your family. There are over 85 variables involved in the home buying process. That is entirely too much for me to go over right now, but we've narrowed that down to 7 factors that give our clients an advantage to negotiate the best possible terms and concessions in order to spend the least out of pocket when purchasing a home, right? Um, those 7 steps or those 7 factors are expert advice and opinions, homeownership responsibility, home equity swing, the ideal home at the right price, negotiation and offer strategy, obviously closing the sale of the home, and then lifetime vendors. So, digging into expert advice. My job and any other real estate agent out there, our job is to prevent you from making costly emotional decisions or ending up in a wrong home. At the end of the day, that's what it boils down to. 99% of the homes that are on the market you have access to with your phone, right? Um, our job is no longer to find you a home, right? You have access to pretty much again the same homes that are on the market that I have access to. The difference is my objective is to get you into a home that makes the most sense emotionally and financially. And then another thing that people often forget about is the exit strategy. So that's something that's almost at the forefront when it comes to me when we're looking at home ownership, right? So we'll go over your home ownership goals. We look at financing programs, different financing programs, your out of pocket expense review, credit analysis, the homeownership programs that you may qualify for. Of course, a market analysis before we make any offers. We want to make sure that whatever we offer actually makes sense based on the other homes in the area or the comparable homes in the area that have recently sold. Um, Even real estate as an investment, right? Again, I've shared that I'm also an investor, so that's why exit strategy is truly important to me. And then the buyer incentives that are out there. So working with an expert prevents you from making a costly emotional decision that can turn into regret. So we determine your time, your motivation, and most people that inquire about purchasing a home are in the beginning stages and really don't know where to start. So, in about 90% of people, life changing action only occurs when their dissatisfaction with their current situation or renting, right? And the vision that they have for the future exceeds the resistance that they are bound to overcome, right? Or bound to have to overcome, right? There will be obstacles when it comes to home ownership. It just is the nature of this industry because we're dealing with sellers that have an emotional attachment to these homes in most cases, and then obviously dealing with builders as well that have a financial attachment to the home. So they can't just throw an arbitrary number out there or accept an arbitrary number. At the end of the day, they are a for-profit business, so they have to be able to turn a profit when they are selling these homes, right? And resistance can come along in your personal life, like you may need to save more or boost your credit score, um, or in some cases, this does happen where you may have to request a gift from a family member for down payment assistance or help with your down payment. Even in the market we're in right now, um, nationwide, resistance is there. It'll always happen. It's just the nature, again, of this business, of this industry, and of getting into home ownership. It does not always come easy for everyone. But your agent should be able to not just help you overcome any hurdles, but project the hurdles before they come, right? So, getting pre approved with the lender will review your income, your debt, your credit, your cash for down payment, your closing costs, as well as your debt to income ratio to determine your credit worthiness. And there are upfront expenses, and the most common upfront expenses are going to be your earnest money deposit, your option period fee, and your general inspection. All right. So your earnest money deposit is 1% of whatever the sales price that you, the buyer, and the seller agree on, and this must be provided to the title company within 72 hours after um, terms are agreed upon between you and the seller. Okay. Homeowner responsibility. Knowing your homeownership responsibilities upfront can minimize the number of surprises, financial or otherwise, as well as regrets that could come up after you close on your home. There will always be future maintenance costs, from heating and cooling your home to securing and protecting your home with insurance or um, your property protection, ADT, or whoever you utilize for that. Yes, there's a lot to consider when purchasing, but my job is to make sure you look at all angles of home ownership. One way that we protect your home up front is asking that the sellers provide a home buyer's warranty on your home. A home warranty is a service agreement that protects a home's major systems and appliances from everyday wear and tear. So, from your foundation, your roofing, your plumbing, electrical, um, your heating, ventilation, and air conditioning as well, right? So, we want to make sure that all of that is protected via a home buyer warranty. Now, the difference between your homeowner's insurance and a homeowner's warranty is the homeowner's insurance is hazard insurance. It only covers items damaged in fire. If you add a flood policy, so flooding, wind damage, theft, and liability for harm and to others that happen on your property, right? So we protect it with your home buyer warranty or homeowner warranty. And then we protect everything else with the actual insurance policy. Home equity swing. So, in most cases, when a person is purchasing a home, there is an emotional mindset that comes into the forefront. But we also want to think about an equity mindset. So, are you looking at a 15-year or 20-year or 30-year amortization schedule or mortgage? Compare all of them across the board. What makes the most sense? Will this be a short term or a long term hold? What makes the most sense, right? You always want your financing to match whatever your plan is in terms of holding the property, right? And even doing a rental property analysis, if someone thinks that they will only be in a property for 3 or 5 years, what would it look like 3 or 5 years down the line to rent that property out? Okay. And then the most budget friendly way to do a 13th payment is to pay 1/12 extra each month. For example, if you have a $1,600 mortgage of your principal and interest, right? And you want to make extra payments, then paying $1,733 each month would give you a full 13th payment for the year, for the calendar year. And over time, that extra payment, will cut off years from your actual interest payments. Okay. Right home at the right price. There will always be the possibility of hidden landmines when purchasing a home, from property liens, encroachments, easements to the insurance report, or even a cloudy title. If these arise, a great agent will be able to guide you through them, or a great title partner that has partnered or has a relationship with the agent will be able to guide you through. Now, what is your current quality of life? A lot of people want to say, hey, I want a 4 bedroom, 3 bath home, but they forget about their existing current quality of life. You don't want to sacrifice that for the home. You grow to resent the home, right? And what I mean by that is, the proximity to work. What will your commute look like, right? If you and your spouse or whoever you're dating or whatever, you constantly or maybe weekly go out to fine dining experiences, is that something that you want to forego in the future because you've purchased a home, right? If you go to the gym frequently, is that something that you want to forego because you've purchased a home? Probably not. So when it comes to the actual home, we will review your price range, the age of homes that you're looking at, or the age of homes that you're open to, bedroom and bathroom count, and both home amenities as well as neighborhood amenities that may be ideal for you. Now, the offer strategy. Leveraging negotiation strategies so you end up with the best home at the best price, with the best terms, and the best conditions for you. There are many negotiation conditions and concessions that make or break a deal besides the price. It's not always exclusively about the sales price when you're purchasing a home. Is the seller open to actually covering the cost of the home warranty, right? Will they cover any repairs based on the inspection report findings? Okay, are they open to assisting when it comes to closing costs? Are they open to changing the closing date? Right? Do they want to close in 45 days or 60 days as opposed to 30 days? What is most convenient for you, the buyer? Right? Those are things that we'll discuss, and all of that will be part of your offer. Right? So, seller paid, buyer concessions. your option period deposit, earnest money deposit, the type of financing, who pays what when it comes to the homeowners association if there is a HOA, who pays what when it comes to the title policy, the survey. All of these are negotiable and can win you your next home just based on how you position your offer strategy, right? There are positions of both strength and weakness for the buyer and the seller. And my job, quite frankly, is to position you, the buyer, for an accepted offer when we find the right home. And obviously, closing on the sale of your new home. Realtors do, again, much more than solely help you find a property. About 99% of homes are listed on right on your phone. You have access to that. The reason you need a realtor is to manage the transaction from contract to close. We manage the timeline, the milestones that you are responsible for meeting based on the actual contract. This is a legal binding contract when you are purchasing a home. The inspection timeline and deadline, right? Repair negotiations, contractual amendments, and of course the settlement review when we get to the closing table and we take a look at what your closing costs are going to be. And because we're in this business daily, we have an abundance of connections with vendors that you may need in the future, such as lenders to refinance the home down the line. Okay. Your title company, if you want to add a spouse later on, any cleaning companies, general contractors, handyman, um, painters, foundation companies, and much more. Now, the 8 steps to homeownership. The most important step is actually deciding to buy. Only you can make the decision to buy a home. No one else can do that for you. Securing financing. So get it pre approved for a mortgage, hire your agent, sign a buyer's representation agreement with your realtor, and then find your home. Start with the community that you want to be in, right? The community search is part of your homework. It's not just it does not just fall solely on me or your agent to understand what you want when it comes to a neighborhood or community, right? We could provide you as much information as possible, but your job is to sift through that information and make the most sense out of it for you and or your family. Right. From there, we make an offer. We perform due diligence, such as getting an inspection, getting insurance quotes, and then ultimately we close on your new home. Right. Send all requested documents to your lender and the title company, and then we close. And again, the 8th step is to protect your investment with insurance and your home buyer's warranty. So, by the numbers, buying your first home can be an emotional decision, but it's also a very rational decision. We've all heard home is where the heart is, but today's buyers also understand that home is where the wealth is. The median net worth of renters is about $10,400 in comparison to homeowners, almost 39 times that at $396,000. When you purchase a home, your net worth is increasing based on a couple factors. One, you're paying your principal balance down monthly. When you're doing that, you're building equity every month. And if you're prudent in your purchase, you should purchase in an area that has seen constant appreciation. So you're paying your principal down, your equity goes up, right? Now, take a look at this. Um, Again, your median net worth of renters back in 2019 was 6,300. Now it's about 10,400. But the median net worth of homeowners just in the past 4 years has gone from 255 to $396,000. That is a huge jump, right? And that's mostly because of home ownership, because of the equity in your home. In a few years, you can use your equity to trade up to a bigger home, a neighborhood that has more amenities than your current one, a school district that better aligns with what your goals are when it comes to getting your kids in any specific schools. a closer commute to work, or a closer commute to family, or just a newer home, right? All of these are things I've helped existing homeowners trade up their equity into a new home, right? All of these reasons. So here's some more real numbers, and this should be very eye opening. Making a decision to buy, according to the Federal Housing Finance Agency of Texas, if you purchased a home in Q3 of 1994 for $100,000, today that home would be worth $402,000, or 302.56% more, which is about 10% per year. Even if appreciation slowed to 40% of what it has been the last 30 years, so from 10% to 4%, purchasing a home today for $400,000 means it would be worth $880,000 in 30 years, right? If appreciation remained constant at 10% per year for the greater Houston area, over 30 years, your home would be worth $1.6 million by 2054. And when looking at renting versus buying, this is another eye opener. If you took out a 30-year fixed rate mortgage for $300,000 and made monthly principal and interest payments of $1,849, you'd pay $665 in principal and interest payments over the life of the loan. And that's at a 6.25% interest rate. Now, after 30 years, you'd own the home outright with an appreciated value potential, right, of $1.6 million. Okay. So you've essentially paid $665,000 in principal and interest payments over 30 years, but now your home is worth $1.6 million. Okay. Again, that's at 10% annual appreciation based on the previous 30 years. Now compare that to paying $1,849 per month in rent over 30 years. Even if your landlord improperly never raised rent over 30 years, you would still spend $665,000 if you're paying $1,849 per month. If your landlord raises rent by 1.5% per year over 30 years, you would spend almost $1 million and have nothing to show for it. Literally nothing to show for it. When you move, you just pack your things up and you move. That's it, right? Now, going back here, if you purchased and you were paying $1,849 principal and interest payments, you'd pay the same $665, but over 30 years, your home would be worth $1.6 million, right? Huge difference. Securing financing. So you want to choose a loan officer, complete a loan application, and get pre-approved. Determine what you want to pay and select a loan option. Submit to the lender an accepted purchase offer contract, get an appraisal and title commitment, obtain clear to close, and funding. That's just the linear step by step when it comes to financing component of home ownership. This is why homeowners' net worth is significantly higher than the net worth of renters, and it will continue to be the case. Front end ratio. All right. So typically lenders want to see that your principal, interest, taxes, and insurance payment is no more than 28 to 33% of your gross income. It depends on the loan type and your overall credit profile, whether it's on that 28% side or the 33% side. For example, let's say your gross monthly income is $6,000 and your max housing ratio is 33%. The maximum limit you could spend each month is $1,980. Now, your DTI, or your back end ratio, shows how much your gross monthly income is needed to cover all of your debt, including your mortgage payment. Typically, this can range from 35 to 45%. Again, a lender will take a look at four factors to determine your credit worthiness: your current income, your credit score, which gives them an idea of how you repay and manage your money, your debt, available cash and assets that you have available to cover closing costs and down payment, and your DTI. This is how lenders measure your ability to manage the monthly payments to repay the money you plan on borrowing for this home. Hiring your agent. This sets mutual expectations in writing between you and your agent, commits your agent to getting you into the home you want, while you commit to exclusively working with that agent to find a home. Okay, so finding a home, you'll define your home criteria, analyze your values, needs, and wants. There's a major difference in most cases between your needs and wants. My job as an agent is to reel you back in, right? To determine what makes the most sense, aka your needs, and then satisfying those needs and then complementing those needs with the wants. Consult with your agent to understand the rules of your market. Everything is negotiable. So, your owner's title policy, survey, buyer's home warranty, closing cost contribution, your homeowners association or property owners association, who pays for what. All of this is negotiable, and all of this is part of the contract or part of your offer. When viewing a home, what you consider and what your agent considers are two different things. You'll want to look for layout, space, a sense of value, convenience of location to work, school district, home features, and community amenities. However, your agent will be looking for how this specific sales price compares to the homes that have sold recently in the same area, same vicinity, when it comes to size, layout, and then, of course, your value. And again, one thing that I am a proponent of is looking at your exit strategy. And here we will review your upfront expenses when you're looking at purchasing. So, your earnest money deposit. Earnest money is 1% of agreed upon sales price. Your earnest money deposit made by the buyer goes to the title company. It must be at the title company within 3 days after the buyer and seller agree on price. It's credited toward the buyer's down payment and or closing costs, and it's refundable if the seller terminates, right? My other job is to protect your earnest money deposit. So we will request an option period, and an option period is the unrestricted right to terminate during whatever specific period we negotiate. So whether it be 5 days, 7 days, or 10 days, during that option period, you can terminate to retain your earnest money, right? So if we have a $400,000 home, your earnest money deposit is $4,000. You will pay anywhere between $200 to $500, and this is non-refundable. This is your option period. Again, you are paying for the unrestricted right to terminate during this option period. Again, it could be a 3 day, a 5 day, 7 day, 10 day window, whatever we negotiate. And then your other upfront expense is your inspection fee. And we'll make an offer. So your price must reflect true market value of the home. What I mean by that is if you qualify for a mortgage of $300,000, we're not looking at $600,000 homes and making an offer of $300,000 on $600,000 homes. That is just a waste of everyone's time, just being completely honest there. So it must reflect your true market value. And then terms. So we address timing and then the financial considerations. And then conditions allow the buyer to opt out of a deal if the home has a problem, such as your option period or inspection period, third party financing, appraisal, the property appraisal. So the property must appraise if you are actually using financing. Is the property insurable, right? And does the lender require any specific repairs? Perform due diligence. So, general property inspection exposes any structural or hidden issues within major components such as structural foundation, roof, plumbing, electrical, and HVAC. Your insurance policy protects against loss or damage, and the appraisal assures the lender that the home is valued at the agreed upon sales price. And again, all of this is performing due diligence. It's the big stuff that really matters when it comes to the inspection report, right? Is your foundation cracking or crumbling? Are there cracks inside the home? Has water penetrated the home? Do you see any mold issue, or does the inspector see any mold issues? Is the HVA system failing, right? Does the home need a new air conditioner for the AC unit, a new furnace for the heating, a new water heater for the plumbing. And then what if there are issues? We can negotiate repairs, negotiate a new sales price in lieu of repairs, or negotiate adding a buyer home warranty or adding an additional warranty. And then close and fund. So pre-closing responsibilities include appraisal, survey, title search, title insurance, keeping yourself mortgage worthy. That is extremely important. Don't qualify for a mortgage, get a home under contract, and then go purchase a vehicle or purchase the furniture via credit card, or via, financing before you actually close on the purchase of your home. It happens all the time. But this is just a friendly reminder. Do not do that. You no longer will qualify for your home. And again, you won't, retain that earnest money. You've lost your earnest money at that point. And then we'll do a final walkthrough before closing to make sure that the home is still standing or in good standing, good condition. And you'll get your settlement statement typically 3 days before closing. You will wire certified funds to the title company. Again, the title company is the third party to distribute the funds to the seller, and your bank will distribute funds to the title company to go to the seller as well. Then evidence of insurance. Your lender wants to make sure that the property is insured, and then transfer of clear title, and the title company does that. And on closing day, we just want to make sure again that you protect your investment. You have a homeowner's insurance and your home warranty. And welcome to your new home. I'm very proud of you. I'm excited for you. And I appreciate you for utilizing the Harden Real Estate Group. So to book a no obligation consultation, text SMART Buyer to 832-429-8393. Let's get you pre-approved and find a new home for you. You can find us online on Facebook at the Harden Real Estate Group, on Instagram, LeVar Harden _realtor, and even on TikTok at LeVar Harden _realtor. I look forward to serving your needs. Thank you.